What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you how I feel about the market conditions as well as my strategy going into the week ahead. If you get any value out of this video, remember to click that like and subscribe button, and let's jump right in. Okay, so when evaluating the market conditions, the number one thing that I like to look at is the major indices in the market. And for me, that's the NASDAQ, that's the S&P 500, and that's the Dow Jones. And so that's where we're gonna start. And as you can see here, when we look at the NASDAQ chart, it was a pretty rough week. We reached highs earlier in November here of around 16,212. But over the last 2 weeks, we've seen a fairly significant pullback. We have now fallen through the support that was established by the resistance in September. We have fallen through that key level, and it looks like the next major level of support that we could see is around 14,200, right around this area right here. So it was not a good week for the NASDAQ. It was not a great indication. We did not see the support step in like we were hoping for last week. And it is definitely choppy trading and choppy market conditions right now. When you look at the S&P 500, it's a very similar chart. We closed right at the key level that we established back in September here, so it wasn't a massive red flag. We could easily see a rebound going into next week, but it definitely wasn't a strong week for the S&P 500. Again, I believe we closed lower on Friday than we opened on Monday, so it was definitely some choppy trading and not a fantastic week for the S&P 500. When you look at the Dow Jones, this probably took the hardest hit over the week, and on Tuesday and Wednesday we saw a pretty massive sell-off right here. Friday was definitely choppy. Thursday was a decent day, but again, we are trading around this bottom level of support at the moment, so fairly choppy trading, definitely a significant pullback in the Dow Jones, and something to be watching for. Now, why is this happening? Well, there's three major concerns that at least I think are causing this. Number one is the COVID variant, the Omicron variant, as well as some increasing COVID numbers. We're gonna look at that in 1 second. Number two is interest rates climbing back up. If Jerome Powell raises these interest rates quicker than he needs to, or people get worried about how quickly he's going to be raising them, that could be a major concern for the markets, and it's going to be the growth stocks and the tech stocks that are probably going to see the hardest pullback. And then the third worry right now is inflation. If inflation gets out of control, it could be some major repercussions for the economy. But let's focus on COVID, because I think that's probably the most important and the most urgent issue going into Monday, Tuesday, because as of right now, daily new cases in the US are on the rise. We did see a little bit of a drop last week, but this week it kind of continued the trend. We saw new record highs over the last kind of 1 to 2 month area. We're not quite at the highs of August and definitely not at the highs of last Christmas, but the numbers are going up over the last few weeks, and that is cause for concern. We also have a major pullback in the price of Bitcoin today. It dropped from like 52,000, 53,000 all the way down to almost 45, 44,000. So it was a major pullback. It was not a good day for Bitcoin, and it was actually a terrible day for almost every single cryptocurrency. This is just a screenshot from stockcharts.com where they have a crypto kind of group right here, and everything was down. Bitcoin down 9%, Ethereum down 3.7%, XRP 12.7%, Bitcoin Cash down 12%, Litecoin down 14.7%, EOS down 17.9%. Like, it was a major pullback today in the entire market, and it's going to be something that if you have exposure to in the crypto world, you need to make sure you're managing your risk right now, and it's something that you need to be well aware of, because this is the volatility that comes with crypto. These pullbacks are bound to happen. If you're a long-term investor, I think it could be a buying opportunity, but if you're short-term and this caught you off guard, then you need to reevaluate your strategy. Now, when it comes to earnings this week, we have a variety of different companies coming out. Probably GameStop is one that I'm most looking forward to, but we also have MongoDB. We've got ChargePoint coming out on Tuesday. And then another one I'm really looking forward to is Udemy coming out after the close on Wednesday. We're going to talk about that stock in this week's watch list. We also have Costco on Thursday, as well as Lululemon on Thursday. So it is a good week for earnings. There's a couple of plays out there if you like to trade earnings or invest based on earnings. But what you need to do is think about what direction is the market going on Monday and Tuesday, because that is what's going to dictate your strategy, and that's what should dictate your strategy, because you want to be trading with the direction of the market. You don't want to be buying in as everything is selling off, and you don't want to be selling off as the market is going up. If you're going to try and time the market, you want to get in and out when the trends change and when you have confirmation of that trend change, and that's what you should be looking for. But going into Monday, Tuesday, we need to evaluate, is the market going to continue going in a bearish direction, or is that trend changing? Are we finding support, and is the trend and is the direction of the market changing compared to the last 2 weeks? That's what we're watching for. And so in scenario one, if the market continues to sell off, if the stocks continue to trade lower and our indices open lower on Monday, that is going to put us in scenario one here, and that is going to be a bear market, and it's probably going to be caused by COVID numbers increasing, any news about interest rates increasing, or any bad news about inflation. That is going to cause the indices and the individual stocks within those indices to fall, and here's my strategy for that scenario. I'm going to walk you through the other scenario in just a few minutes, but if that is the case, here's how I plan to profit from that scenario. Number one, I plan to buy the SQQQ. This is a 3 times leveraged inverse NASDAQ 100 ETF, meaning that it moves in the opposite direction of the NASDAQ, and it moves by a multiple of 3x. So if the NASDAQ 100 drops by 1%, this goes up by 3%. I mentioned this in my strategy last week, and if you had bought in last week, you would have got in around 621 at the open on Monday, and you could have sold out as high as $7 on Friday. So you would have done extremely well, and this is an ETF that holds over 100 stocks. You would have made a nice, beautiful over 10% gain on the week. So that is one strategy for making money when the stocks go down. The next strategy you could look at is shorting individual stocks that are going to be the hardest hit. In my opinion, the stocks that are going to be the hardest hit by COVID are number one going to be the airlines and the cruise ships. We've seen this already, and if COVID comes rolling back, those are the two industries that are going to take a hit, and I would be watching Royal Caribbean Group very, very closely. The reason I'd be watching them is because previously the 64 level acted as support, at least over the last sort of year level, and if it falls through support, that means that everybody buying at 65 will have been bought out. They will have spent all their money. The stock will continue to fall. And if COVID continues to get worse, this is going to be a great opportunity to short the stock if we fall through that support. However, when you short the stock, you do have increased risks, so you need to make sure you manage that. Now, if you're looking for something to short with a little bit less risk, you could short the S&P 500 ETF, ticker symbol SPY. You can go short on this, and this is nice because it's a broad market ETF, so it's not going to be gapping up by 10 or 20% at any point. It's just probably not going to happen. So it gives you a little bit less risk, but also a little bit less reward, because it's probably not going to move quite as fast as some of the airlines or the cruise lines if the market continues to sell off. So that is my strategy. If the market moves lower come Monday and Tuesday, probably one of these three strategies, probably starting with the SQQQ, just because it gives me the best risk to reward ratio. However, if the market rebounds and if the market comes back on Monday, Tuesday, you need to have a strategy for that scenario as well. And that scenario is probably going to be based on COVID numbers decreasing, interest rates staying stable, and no more bad news about inflation. We should see the indices rebound, and here are the stocks that I would be investing to in that scenario. Okay, so for me, the number one company that I really like is SOFI Technologies. This is a company where I think they have a great business model. They've made a nice run. However, the stock has corrected far too hard over the last 2 months here, and I think it's coming down to a level where it's not only valuable, but it has key levels of support. Let me show you what I mean here. The stock has ran up to $24.65, and just over the last few weeks here, it has fallen by over 38% in under 1 month to $15.19, and we have major support right here at $13.50. And so if the stock continues to fall and it comes down to this key level of support, and then we begin to see a rebound in the market, SOFI Technologies is a stock that I would definitely be interested in purchasing. I did purchase it earlier in this year, and I made a little bit of money on the run up here. I wasn't able to sell out at 24. I sold out right here around 19 or 20, but I did make a nice little bit of profit on SOFI already. So I'm literally looking for the exact same trade where it bounces off support right around $13.50. Next company that I also like that I think has sold off a little bit too much is Palantir. This is a software company that has done extremely well. They have great financials, a good balance sheet, good management, and excellent growth, an excellent forecasted growth, but the stock is down pretty significantly from a high of around $27, now trading at around $19 with major support at $17. So if we see it come down around this $16, $17, that's going to be another another area where I'd be looking to buy into it as long as the market is rebounding, as long as we are seeing strength in the market and the market is starting to go in the bullish direction. That is when I would be looking to put my money back into the market and purchase shares in Palantir, in SOFI, and in OpenDoor Technologies. I like this company because they're showing, again, a very similar pattern where they have sold off by the 30 to 40% mark, and now they're trading along major support right here. I think this company could be a great opportunity to get in if the market begins to rebound. That's the key thing here, is we're not going to buy in as soon as Monday morning opens. We're going to wait. We're going to give it some time. We're going to make sure we see some confidence, and we're going to look for those key indicators like COVID numbers, inflation, and interest rates. We're going to see what's happening with those three factors before we make a decision. But OpenDoor Technologies is another one that I like, so I think it's approaching value, it's approaching key levels of support, and if the market gives us a good rebound, it could be a great opportunity. Now, if you're looking for a company that hasn't dipped like that and isn't the same pattern like that, here's a company that I think is breaking out. This is Real Luck Group, and this is a company that is doing esports betting. They have had a little bit of trouble over the last few months kind of getting everything together. They are doing a sort of a revamp of their application and everything that they're working on, but I think there's a great opportunity in esports. I do want exposure to it. I do think that esports betting is only going to grow in the future, so I really like this opportunity here, and the stock has increased volume. It's starting to break through our moving averages. We've just broken through the oversold zone of the RSI, and we have a crossover of the MACD, so I really like the direction of this stock. Next one here is Avicanna. This is a similar pattern where the stock is basically pretty steadily traded in a bearish direction. However, again, we have increased volume. We have a breakthrough of the RSI. We have a breakthrough of our moving averages. We're doing extremely well. We have broken through previous support. We are breaking through previous resistance here, and things look really good for Avicanna. So I like this stock. I like the company, and I think we have a lot of good positive indicators here. And we have legalization coming to the US, which I think could be a great advantage for this company as well. Now, the last company that I want to talk about here is Udemy. This is a little bit more of a longer term play for me. I don't know if I would be entering this one in the next couple of days here. I kind of want to see how it develops and how everything unfolds here, but I love the industry, I love the company, I love the business model, and I really like everything about the company. They're trading at a very low price to sales ratio of around 6 right now, which I think is a pretty significant discount. They're also trading below their IPO valuation and price. They have earnings coming out on Wednesday after the market. I do expect the earnings to do pretty well because I think they have a great platform. I use the platform. I'm a customer of theirs, and I like everything about the company. So as soon as this company starts to show some signals of a turnaround and a rebound, I'll probably be taking a small position and then building into it as the stock runs higher. Now, if you're interested in any of the trading platforms I use, I got all the charts here from Questrade, and there's a link below for $50 in free commissions. Wealthsimple is also doing a promotion where if you sign up with the link down below, you get 2 free stocks, and then you can go into your app and create your own link for your friends. And when they sign up, you get 4 free stocks, meaning that they get 2 free stocks, you get 4 free stocks. Wealthsimple is literally giving away 6 free stocks, and in the last few days, I've been able to make over $1,500 because they've given me 2 shares of JP Morgan Chase as well as 1 share of Square, which is overall valued at around $600 Canadian. Absolutely amazing, and then plus all of the other referrals and the free shares. I promise you it's a quick and easy way to make $1,000, especially if you have a big family. I highly recommend it. And if you're looking for $25 in free crypto, there's a link down below to create an account with Newton. All you have to do is put $100 in there, then they give you $25, and it's literally like a 25% ROI on your money right away. You can brag about it to all of your friends and then do the exact same thing and send them a link. You could literally get all of your friends $25 and 2 free stocks in like 10 minutes. So I highly recommend it. And just as a summary to this video, you need to trade with the direction of the market. The first thing I do Monday, Tuesday is I make sure I understand what direction the market is going in, and I trade in that direction. Number 3 is you need to be patient. You need to be very patient, because sometimes the markets are too choppy. It doesn't give you a clear direction, and sometimes it's better to not make a trade than to lose money in a trade. So you need to keep that in mind, because sometimes there's just no trade to be made, so you can't force it, and you got to be careful with your money, because the number one rule is don't lose money, and number two rule is don't forget the number one rule. That's the philosophy when it comes to trading and investing. You need to be very careful with that. Also, if you want to see my trades, you want to see my analysis on a daily basis, definitely check out my Discord chat. It's $5 per month, and I'm trying to build a community of traders that are sharing their research, sharing their analysis, and trying to help everybody grow together so that we're not all trading at home alone at our computer. You've got a community that you can join. The link is down below in the description to this video. And again, thank you for watching these videos each week. I sincerely appreciate it. And please click that like and subscribe button if you get any value out of these videos. But we'll see you guys in the next video. Talk to you soon. Good luck trading, good luck investing, and have a great rest of your weekend.